Hello, and welcome to this series where we go over contracts, disclosures, and addendums for Texas real estate agents. My name is Gwen. I am the owner and founder of Happier Days Transaction Coordination, and I created this series to help agents feel more comfortable and confident when they're filling out their contracts and answer questions that I had way back in the day whenever I was a newly licensed agent. I hope that you enjoy this series, and if there's someone that you think could benefit from it, please go ahead and share. Okay, so we're going to go ahead and go over the third party financing addendum. And get Val's expertise on some of the blanks that I had questions about whenever I was a newer agent. Obviously, we're going to use this whenever there's financing involved. You'll never use this on a cash transaction, but this basically outlines the financing terms that the buyer needs to have, the buyer's approval terms, etc. So on this first blank, obviously it says that you're going to put the street, address, and city. Then paragraph number 1, the type of financing and duty to apply and obtain approval. Buyer shall apply promptly for all financing described below and make every reasonable effort to obtain approval for the financing, including but not limited to furnishing all information and documents required by buyer's lender. Check applicable boxes. And then you will go through this contract and check whichever financing, if it's conventional financing, VA, FHA, USDA, reverse mortgage financing, or other financing. They all have similar blanks here, so you're going to go through and let's use conventional financing as our example. You'd go ahead and you'd click the box again, and then you'll go over here and put principal amount of the amount that the buyer is going to be financing. You will not put the entire amount that the buyer is paying for the property, excluding any finance PMI premium due in full in blank years. You're going to use the amount of years that the mortgage is for, so either a 30, 15, or 10. And then I'll go ahead and let Val speak on the blank of with interest not to exceed.
Yes. So interest not to exceed, you want to be in communication with your lender partner on this. So my best practice is I always round up a little bit just to allow, if the market shifts before we actually lock that rate, it allows you to stay in the contract. It's not an out for you. But the one thing that I would say is that lender should have a conversation with the client and say, okay, let's just say right now we're at 6.75 and you could put in there 7.125. But if that client isn't okay with the payment at that rate, then that's a conversation that we should have with the client beforehand and say, okay, at 7%, this is what your payment's going to be. Is that still comfortable? Would you still purchase this property? And if so, then 7% you can put for that blank. If the payment is uncomfortable at 7.125 and they would want to get out of the contract if their payment hit that or if their rate hit that, then I would keep it at 7%. So it's kind of up to the lenders and their discretion, but that should be a conversation that's had with the client. I do like to leave some room for market movement. Ideally, the market's not moving that much that it increases their rate that amount, but that's best practice and what I tell my agents.
That's super helpful. Um, Not to exceed blank percent per annum for the first, and then you're going to also include the same amount of years that you put in this blank. So again, 30, 15, 10, however many years the loan is going to be for. For the first blank years of the loan with origination charges as shown on buyer's loan estimate for the loan not to exceed. And before I let Val touch on this, I will just say that the standard that I see in this blank is 1%.
Yeah, so really 1% should be a standard. And if it's more than that, then that should really be a red flag for that lender because there are cases where there are people in my industry that are not the most honest people and they could be charging the client for the rate that they're getting. So if they're paying points up front and they're just rolling that into origination charges, um, that lender should be honest and transparent with that client and not just, hey, like our origination charges are a lot higher than others. It should be pretty standard and should be around the same ballpark. Just as an example, like our standard origination fee is around $1,700, just under $1,800. And that is just covering like sending the loan through, processing, and underwriting. So it's just to basically for us to keep the lights on, pay our people, and actually do the loan. But if that lender is, again, rolling some of those points or being a little shady and their origination charges are a lot more, then that's really a red flag and that shouldn't be happening.
Another question that I had whenever I was a newer agent is, are loan origination charges the same as the buyer's closing costs?
No, there is a lot more that goes into closing costs, and that's going to be a lot of, and we always tell people this, like the closing costs on our end, we're estimating a lot of that. And as you get closer to closing, those closing costs will firm up and be more accurate because we're starting to then get titles fees because that's all included in there as well. So it's more than just the origination charge, but the origination charge is part of the closing costs.
Perfect. Okay, so again, each of these will be pretty much the same information, plug and play. FHA insured financing. If you were going to use FHA, obviously you're going to go in here, you'll click this box, and then Val, what would we put in A section blank FHA insured loan?
So I would say 9 times out of 10, that's going to be 203B FHA loan, and that's just your standard FHA financing. Now, if the client is doing any sort of rehab loan, and that's where they could roll the costs of any sort of if it's a fixer upper and they want to renovate some of that property, that's going to be a 203K FHA loan. Again, you're not going to see that very often. So most times in that blank, it's going to be 203B.
Perfect. I actually have never seen a 203K loan on a third party financing addendum, believe it or not.
Yeah, that's pretty common. I've never done a 203K loan, so it's pretty rare.
And then the lender is the one who will notify them and obviously provide the pre-approval with that term on there.
Yes, correct.
We have covered all of what we're going to cover for paragraph one. Now we can move to paragraph two. Um, Approval of financing. Approval for the financing described above will be deemed to have been obtained when buyer approval and property approval are obtained. Time is of the essence for this paragraph, and strict compliance with the time for performance is required. A. Buyer approval. Check one box only. The first box says this contract is subject to buyer obtaining buyer approval. If buyer cannot obtain buyer approval, the buyer may terminate this contract within blank amount of days. And a standard thing that I see here is whenever we're in a hotter market, sometimes we'll see 7, 10, 14, and then sometimes we'll see 21. So for the people who are just getting started and are curious what to put in that box, Val, would you like to help us out here?
Yes. So this is also going to be coming from your lender partner, and it really depends on what level approval that lender has for the client. So there are situations, and I definitely do not recommend this, but if a lender gives out a pre-approval letter just based on what the client has stated to them, and they don't have an application, they didn't actually review anything or verify their income, assets, etc., then you'll probably see 21 days in that buyer approval section because they have to do everything from start to finish. But if you have a lender that, let's say, they got the standard pre approval where they have verified all of their income, what income they can use, made sure that they have assets for the purchase, then you'll see 15, I think, is pretty common. 7 could be, again, if they feel really good about it and they're saying, we can get this through underwriting in 7 days, and I'm pretty confident in approval, then you'll see that. So I would say, again, it's going to come from your lender and it depends what level of approval they have gotten. We also, and I know you're going to ask this, Glenn, so I'll just touch on it. So there's also something that's considered fully underwritten approval. And this could be if it's a very competitive market and you know going into it, like let's go back to COVID times when there's 15 offers on every property. If it makes you more competitive to send that loan through underwriting, at least the initial underwriting review, before you even make offers, that gives them the stamp of approval to say underwriting has already looked at this and there's no red flags and we know there could be conditions that they just have to satisfy, which is very common, but as long as we fix those conditions, we're going to be fully approved. So in that case, if you send it through underwriting ahead of time, you can actually select that second option where it's not subject to buyer approval, meaning you're waiving that financing contingency. So you don't want to do that if you haven't sent the loan through underwriting because you just have no way of knowing. There's always things that could pop up later in the process. So again, it's going to depend on your lender's process and what level of approval they've gotten for that client.
Super helpful. And another thing to touch on too is exactly what you just said. So, like, this property is not subject to buyer obtaining buyer approval, even if you're in a multiple offer situation and you think that it would be best to go ahead and not include the contingency for financing. If that buyer has not gotten with a lender, it's not really in their best interest to go ahead and remove that just to make the offer better, because you can really be putting them in a financial situation where they could lose their earnest money if anything did go wrong, which is exactly why the blank subject to buyer approval is used most of the time. But yeah, I think we covered everything there. Now, property, or let's go through this in full. So this contract is subject to buyer obtaining buyer approval. If buyer cannot obtain the approval, buyer may terminate this contract within blank days after the effective date of the contract, giving the seller. This is a really important one. So up here, one thing that we were going to touch on that we actually just skipped through is if for any reason the lender comes back and says, okay, we've got full approval and we're going to put you at an interest rate that does exceed the amount that you put in this blank, the buyer is able to terminate. But here are the things that the buyer would have to provide from the lender in order to actually terminate through this contingency. So, a notice of termination and a copy of a written statement from a lender setting forth the reasons for lender's determination. If a buyer terminates the contract under this provision, this contract will terminate and the earnest money will be refunded to the buyer. If buyer does not terminate the contract under paragraph 2A, the contract shall no longer be subject to buyer obtaining buyer approval. Buyer approval will be deemed to have been obtained when the terms of the loan described above are available and the lender determines that the buyer has satisfied all lender requirements relating to buyer's assets, income, and credit history. Now, obviously, we don't go through that if this box is checked. Property approval. If buyer's lender determines that the property does not satisfy lender's underwriting requirements for the loan, including but not limited to appraisal, insurability, and lender required repairs, buyer may terminate this contract on or before the third day before closing by giving the seller notice of termination and copy of a written statement from the lender setting forth the reasons for the lender's determination. If buyer terminates under this paragraph, the earnest money will be refunded to the buyer. If buyer does not terminate under this paragraph, property approval is deemed to have been obtained. Anything you want to include on that?
No, I don't think so.
Okay. Paragraph 3, security. If required by buyer's lender, each note for the financing described above must be secured by vendors and deed of trust liens. Paragraph 4, FHA, VA required provisions. If the financing described above involves FHA insured or VA financing, it is expressly agreed that notwithstanding any other provision of this contract, the purchaser buyer shall not be obligated to complete the purchase of the property described herein or to incur any penalty for forfeiture of earnest money deposit or otherwise, unless the buyer has given, in accordance with the HUD or FHA or VA requirements, a written statement issued by the Federal Housing Commissioner, Department of Veterans Affairs, or direct endorsement lender setting forth the appraised value of the property of not less than blank. So one question that I was curious about whenever I was a newer agent was, do I put the financed amount or the entire purchase amount here?
Yeah, so it's going to be the entire purchase price. So basically, if the appraiser comes out and that appraisal comes up short, then that buyer would need to, in order to follow through with the contract, they would need to bring the difference between the purchase price and the appraised amount, unless they go back and renegotiate to a lower purchase price that reflects the appraised amount. So in that box, you would put the entire purchase price, and that would give them an out if the home doesn't appraise.
Okay. So in this blank, you're going to go ahead and put the entire purchase price, and then the paragraph continues to say, or if the contract purchase price or costs exceed the reasonable value of the property established by the Department of Veteran Affairs, the 3-day notice of termination required in paragraph 2B does not apply to this paragraph. 4A, the buyer shall have the privilege and option of proceeding with consummation of the contract without regard to the amount of the appraised valuation or reasonable value established by the Department of Veteran Affairs. 4B, if FHA financing is involved, the appraised valuation is arrived at to determine the maximum mortgage the Department of Housing and Urban Development will insure. HUD does not warrant the value or the condition of the property. The buyer should satisfy him or herself that the price and condition of the property are acceptable. 4C, if VA financing is involved and the buyer elects to complete the purchase at an amount in excess of the reasonable value established by the VA, buyer shall pay such excess amount in cash from a source which the buyer agrees to disclose to the VA and which the buyer represents will not be from borrowed funds except as approved by the VA. If the VA reasonable value of the property is less than the sales price, the seller may reduce the sales price to an amount equal to the VA reasonable value, and the sale will be closed at the lower sales price with proportionate adjustments to the down payment and the loan amount. Paragraph 5, authorization to release information. A, buyer authorizes the buyer's lender to furnish to seller or buyer or their representatives information relating to the status of the approval for the financing. B, seller and buyer authorize buyer's lender, title company, and escrow agents to disclose and furnish a copy of the closing disclosures and settlement statements to parties' respective brokers and sales agents provided under broker information. So that is in full the third party financing addendum. Val, did you have anything that you wanted to add before we go ahead and wrap this up?
No, I think we covered everything.
Awesome. Well, I have to do a little shameless plug. And if anyone is looking for an amazing lender in Texas, Val is your girl. They have really cool programs. I really like how in depth they go with buyers before they go under contract. So you can avoid a lot of these things, such as the underwriting before even submitting a contract that gives the buyer a really huge strength. They follow up after closing. So if you're looking for a lender, Val is your girl.
Thanks, Gwen. I appreciate you.
Awesome. All right. Have a good day.
Thanks, girl. You too. Bye.
Bye.